Julia Hensel, Grant Hensel, husband and wife. Welcome to Acquiring Minds.
Great to be here.
Thrilled to be here.
So this is an unusual one. You two own and operate a marketing agency, but the division of labor of that story was really that Grant, you searched for the business, and Julia, you run it today. Let's learn more about how you got here and what it looks like now. Julia, start us off with your background, please. Then Grant, will go to you.
Yeah. So I think maybe the best place to start the story is about the why and why we were even interested in entrepreneurship through acquisition. And really that goes back to a long-standing passion about entrepreneurship that I've had. Even as a kid, I was like that kid who would have my parents come to, recitals and talent shows that I would put on. And of course I would charge them admission fee. So I've always been passionate about entrepreneurship. Grant and I actually met in entrepreneurship club in college. And that is part of our story of how we fell in love and ended up becoming married. But then I started my career in corporate America. So for the first 9 years out of undergrad, I was in various roles in corporate America, primarily in strategy consulting. And I loved that. I love being able to work with big companies and understand their strategic drivers. But in parallel, I saw Grant, who was operating his own agency and really loved the ownership and the creativity that you get to have as a small business owner. And so I was excited to kind of dive back into the entrepreneurial side of things and find a company of our own for me to operate. So that's what led us to ETA.
Super. Thank you, Julia. Grant, fill in the holes and tell us about yourself.
My entire life has been an unwitting natural experiment into whether it's better to buy or build businesses. I've wanted to be an entrepreneur since I was 12 and have started businesses from the ground 10 times. 2 of them got acquired in small transactions, 7 of them completely failed, and 1 has done well, which is called Nonprofit Megaphone and does digital marketing for nonprofits and has a team now of about 60 people, which has been great. And I love entrepreneurship, but I went to Booth. My wife, Julia, and I both went to Booth, and we were exposed to the whole notion of search and entrepreneurship through acquisition through that. I had friends that did all kinds of different search paths. And when Julia sort of expressed the desire to be sort of more in charge of her own destiny and have a more entrepreneurial path, because she was at BCG and so didn't have a ton of time, we ended up doing, as you mentioned, like a hybrid where I searched and then we bought a business that Julia now runs, which has been a ton of fun. And now I now invest in people doing self-funded search acquisitions and have a little fun that does that and just love the space.
And what did you mean, Grant, that your whole entrepreneurial journey has been an unwitting, what did you call it, exploration of or tension between buying and building?
Just that if you look at the stats, I'm, depending on your count, either 3 for 10 or 1 through 10 on building. And the track record has been much higher on buying. And so the whole like buy versus build notion, I've learned the hard way that it in fact is often much better to buy.
Gotcha. And say more about your hit rate of 3 of 10, 2 were small exits, and then 1 of the 10 has been transformative. And it's called Nonprofit Megaphone. Not to be confused with an actual nonprofit. It means your customers are nonprofits. You are a for-profit marketing agency. Tell us more. Give us the story of that business in a nutshell.
Business is 9 years old. We provide a service for nonprofits that managing the Google ad grant for them. So Google gives nonprofits $10,000 a month, every month, forever, in credit to run ads in Google search. And so we help them acquire that grant and we run their ads for them. And everyone makes fun of me because my name is also Grant, which is not my fault, but it's been a lot of fun. we serve almost 800 clients. And it was, classic entrepreneurial journey of took forever to get started. We eventually sort of figured things out. Everything blew up. When we hit about $2 million in revenue, we ended up implementing something called EOS, which helped a lot. And it's since grown meaningfully and gotten to the point where we have such a good leadership team that I can be involved only at a strategic level. And I'm actually not in the operations at all because the team is so much better at operations than me, just like Julia is so better at operations than me. And so that's why she runs the business that we bought.
And Grant, so you have essentially stepped out of this business. So this is, from that perspective, kind of the dream. You've got this largish, small business, highly profitable. You're not that involved in the day-to-day.
Yeah, I'm
You,
highly
you
involved
own
in
100% of
strategy.
it.
Correct.
Let's not forget
Yeah.
that. Mhm.
Yes.
Sorry, go ahead.
Yeah. I'm very involved in the strategy and like being supportive to the leadership team and helping us chart the future. But operationally, everyone in the entire business is better at operations than I am. And so we've made the beautiful decision of having maybe 0% involved in operations so that they actually get done very well.
Right. Well, we will spend some time in this conversation on marketing agencies and why they can be good businesses, because they can also be very bad businesses, as we discussed at length on the pre-call. So we're gonna get into that. Okay. So, Julia, you have always had entrepreneurial DNA, but you get ultimately what finally pushes you is envy of your husband and his lifestyle, and
Yes,
wanting
the
more
easiest way to say
autonomy
it.
for your wanting more autonomy for yourself. When you decide to on the path, and you've both been exposed to search at Booth, so I assume the model resonates. You decide to search. How does that take shape? You're at a competitive, demanding consulting firm, BCG, of course, one of the absolute blue chip marquee consulting firms. So probably don't have a lot of time, but tell us how this project starts to take shape.
I was going to say, Grant was extremely helpful because of the situation you just outlined well, as far as I was very excited and passionate and kind of decided that this was something I wanted to do. But searching is a very intensive effort, and I'm sure everyone listening understands that and more. So Grant really led that part of the process, and he'd perhaps share more about kind of the key moments in that journey.
Okay, Grant, please.
Yeah, so Julia came to me with a pitch of like, hey, why don't you find the business and then I will run it, which I loved, actually. I loved the search process. I thought it was a ton of fun. We ended up searching for 9 months. We went to LOI 4 times, or we submitted LOIs 4 times. The first one, the sellers took the LOI and sort of like shopped it to other people, and the deal ended up falling through. So we learned at that moment it is good to present the LOI on a call, get verbal agreement, and then send it for signature with a that day expiration period, which is what we did for all the other transactions, or for all the other LOIs, which ended up great.
Great tip.
Yeah, highly recommend. We'd never send again a blind, non-deadline, not already agreed to LOI. So again, have LOI, communicate by email with seller. Hey, we'd like to present an offer to you. We'd like to present it live via Zoom, and then do so. And then, oh, by the way, this expires within a day. Today, it expires today.
Today,
right?
That seems like the aggressive part of this strategy. How is that received? Obviously, it's worked for you, but do people chafe at that?
It can be pitched in a thoughtful way. So we'd say, we'd love to get on a call to explain the LOI. We'll walk through it. If they have feedback, maybe we're tweaking. And we want to get to the point where we say, there's no point in us sending you a document before we have verbal agreement and a meeting of the minds. And once we do get to that, there's now nothing left to discuss. Everything has just been discussed, is on the paper. And so we'd love to do this deal. If you would love to as well, we're going to send it to you. It expires today. There are other transactions we're looking at, but we're very excited about this. And so let's either move forward or not. And either way option is perfectly fine.
So you don't put something in paper, down on paper, and give and then in there and put in their hands that they can go shop around until they've all but said, you send it, I'll sign it.
Correct. We'll show it to you on a screen share in a document, but we're not sending it, because as searchers will know, the notion of like the buyer, you'll hear from the broker over and over again, like the buyer has multiple LOIs in hand, and we're just never going to be one of those.
Yeah. So carry on. So 4 LOIs.
Yeah. So that was the first one. So learned a beautiful lesson there. The second one had a very interesting story as well, where the financial statements, they did sign the LOI. The financial statements ended up being dramatically incorrect. The business was taking on debt from the sort of digital fundraising or like digital capital providers. You'll have like your payment processor will give you a loan, or like your accounting system will give you a loan. They were in a real cash flow bind, which they didn't really understand. They were taking on those loans, and their bookkeeper was marking them in QuickBooks as revenue as opposed to debt proceeds. And so they thought they were making a lot of money. They were actually losing money and getting into debt more and more with each passing day. So that unfortunately did not work out. it was a great conversation for us to have. Like, hey, you should maybe look into a different bookkeeper. But sadly, we're not going to be the right buyer for you. And anyway, that's interesting. The third one was a wonderful business that actually had something really positive happen to it in the middle of diligence. And so the sellers, who are great people and we stay in touch with to this day, ended up saying, hey guys, we can't sell this anymore. Like this has become a gold mine. Let's stay in touch. Anyway, we've stayed friends with them, and there's now like actually potentially some strategic, interesting opportunities for collaboration with them that have come out of that. So there's actually like no bad conversations in this whole process. And then the fourth and final one ended up being the business that we closed on.
Great. And so we haven't heard the criteria. So when you're going out looking for businesses, what were you looking for?
I'll share mine, and Julia has had hers, which were slightly different. Mine were remote only, and because that's what Nonprofit Megaphone, my business is, we love the flexibility that provides. And I wanted it to be something that had meaningful recurring revenue and something that we felt like we actually understood from more than just like reading a sim. I wanted to have some sort of background knowledge into that. So that was for me.
Yeah, I think similarly for me, I think another factor is just having a really great team. Of course, as being the one to operate the business, I knew that, I get a lot of my joy in life out of who I work with. So just having a team that I was really excited about partnering with was important to me.
Great. So, sorry, what about size? That's always a big one.
So size. We basically wanted it to be something that we had the capital to acquire. And so we thought more about upfront cash requirements than potentially like revenue or earnings size. We wanted it to be above, on the order of like $300,000 of earnings, just from a sizing standpoint. But we had no upper limit, just sort of financing constraints. Because basically, one of the other factors is we're sort of unique in that we did not, if all possible, want to use an SBA loan. Which added all kinds of wrinkles. Oh,
you went into the process wanting to avoid an SBA loan. I know that you didn't. You wouldn't have been able to even if you'd wanted to. Not sure I caught from our pre-call that you actually wanted to avoid that altogether anyway. So say more.
It's nothing against SBA. It's just we don't love debt, and I think it just as the person operating the business as well, I just didn't want to live with that weight on my shoulders, and we didn't want to. We're just kind of allergic to debt, to be honest.
Oh,
just
interesting.
As a personal decision.
Of course, because so much of this model is LBO, leverage buyout. Great. Well, we should say then that if you weren't going to use debt, you were going to need to buy the business all in cash or use equity investors, third-party investors. Which was it going to be? And would answer that first.
Right. The target, which everyone has, was cash and seller financing. And if there was a universe where maybe equity investors would be helpful or needed to help bridge a gap, that's something we considered. The transaction that ended up happening, we were fortunate to not need to do that, which worked out beautifully. But yes, we did. I love the self-funded search model. I've invested in a bunch of people that have used, basically all of them have used SBA loans. We were just like, we know it's a needle in a haystack, but we'd love to find something that's maybe doesn't require that. And it was interesting actually, because it gave us a unique lens on the search where I would go to brokers and I would say, which deals do you have that are not SBA eligible? We're very interested in those. And the nice thing is that those tended to have far fewer buyers. And often like more reasonable multiples in terms. And so it actually led us down an interesting path.
So you were comfortable with seller financing. That's still debt.
Correct. We were comfortable with non-recourse debt.
So the personal guarantee is what is really what the bright red line was.
Correct.
Mm-hmm.
Back to size, 300,000 SDE or in earnings being your floor. Julia, did you want to replace the income that you were making at BCG from day one? Eventually, what did you need to pay yourself?
Yeah, that's kind of how we came up with that number is, BCG was, of course, a lucrative endeavor. And so just wanting to make sure that this was replacing that revenue.
Okay. And so of course, some of those earnings are going to need to be reinvested into the business. You're not going to have, and if you have seller financing, you are going to need to have service debt. So I'll assume, is it fair to say that you wanted to pay yourself something in the 125 to 175 range?
Yeah, roughly.
Okay.
That's fair.
Roughly. Okay. And then, of course, the other point is that if you are not going to use, often we use SBA, we searchers, not because we necessarily are so taken with the LBO model, although it is quite a compelling model. It's simply because we're forced to, because we don't have the equity to bring to the table. And so this is a way that we can become owners without already needing a lot of capital. You guys, I guess, don't have that constraint. We've already covered the fact that, Grant, you have this quite lucrative business. So all to say, your balance sheet's probably bigger than many listening.
Probably a reasonable assumption. We both are business nerds. We spend all of our time working. That tends to produce money, and then we try and spend very little money to the extent possible. And so that, we got married, I guess, almost 8 years ago now, and I've had a very aggressive savings rate that whole time. And with the idea of capital can be used to enable entrepreneurial endeavors. And so in some ways, we didn't know it would take this exact form, but in some ways, it's something we've been pondering for, the past almost decade.
Fantastic. Where were you looking for a remote business, a remote recurring business with a great team? I mean, tell us, because that's what we all want.
The magical unicorn. So right. I have a lot of friends who've done proprietary search as well as broker-led search. My theory was, at the beginning, I just want to see deals and understand, how does this transaction process work? How does it work working with brokers, all of that stuff. So started looking primarily at websites. We knew we wanted to be 100% remote, and there are some broker websites of businesses that are virtual. So Website Closers is one. There's like Quiet Light. There's Flippa. There's a whole host of these types of broker websites for.
Although I feel like you just
businesses.
named the big three.
Indeed.
Yeah.
Yes, there's a little bit of a drop off after that. That's fairly steep. So just started looking at deals, getting in touch with brokers, asking them especially about okay, what are your non-SBA deals? What are deals that have been languishing for one reason or another? Because maybe there's some weirdness. We're a lot of times businesses like that, there's someone who wants to buy them primarily as a financial buyer and is not deeply interested in the operational side of things, which we felt like we could also potentially differentiate on, because we love the operations and that's what it's all about. I didn't realize that, but that's what brokers ended up telling us, is you guys are actually kind of unique because you have operating and small business experience, which I would not have thought was a differentiator.
So say more about this. So these, again, to rename the three platforms that you talked about: Quiet Light, brokerage known for e-commerce and kind of e-commerce adjacent digitally businesses; Website Closers, same thing. And then Flippa, of course, which is more of a biz buy sell for digital businesses, if you will. So in this world, a lot of buyers are actually not that interested in operating something. They're buying these businesses as assets more. And so you can differentiate by saying, no, I actually want to run this thing. Is that
exactly?
Say more about that, just because that a great differentiator for a would-be buyer out there to position themselves the way that you guys did.
Right. There seems to have been a effective marketing campaign done by someone about the notion of digital assets, where you could just buy these cash flowing digital assets and they don't take a lot of time. And, the seller only works 5 hours a week and it can just be like real estate for you almost, which is a thesis that I wholeheartedly disagree with, and that sellers tended to disagree with as well. And so they tended to be attracted us. It was interesting. There's those I would say those three platforms have large email lists, and so many of the transactions that they bring to market, they will end up talking to dozens or hundreds of potential buyers, and the average caliber of that buyer, from what the brokers have shared with us, is quite low on average. And so by showing up, by wanting to operate, by being a nice person who is just sort of meets all your normal business hygiene standards, somehow that was a meaningful differentiator in the eyes of brokers and sellers based on what they ended up telling us, which was very surprising, but an interesting observation.
The other thing that, of course, differentiated you, I imagine, is that certainty to close. So you were leading with, by not being an SBA buyer, again, returning to like many SBA buyers are there because they don't have any money or don't have very much money, not what brokers like to hear. You could also differentiate yourself by saying, we're not SBA buyers. We have some capital to put at this. That probably puts you in the top 10% of of buyers out of the gate.
Yeah, you win some, you lose some. It gives you a lot of points for seriousness and certainty of close, and it gives you the drawback of you were pushing pretty hard on the seller financing side of things, which the seller may or may not be deeply excited about.
Okay, right. So I guess I shouldn't overstate this thing about not being SBA buyers.
Advantage at the moment. Yeah.
Well, and because right. So, but all just, I mean, it's not that you guys were going to be paying 100% in cash for a business.
Correct.
You were still going to negotiate pretty hard for substantial seller financing. So it's not like you were, cash buyers.
Correct. Right.
Okay.
Which I do think is deeply appropriate in digital businesses where there's a lot of, in a marketing agency, it's clients and team and processes. And so that's hard to buy without some ongoing seller skin in the game for either like rolled equity or seller note or something to sort of facilitate a smooth transition.
Okay. So want to take seller financing not just to enable you financially to get the deal done, but also to be the hook to incentivize the seller for a good transition.
Indeed.
When you say remote and the three platforms that you're looking at, Quiet Light, Website Closers, Flippa, now many of the for sale quote unquote businesses there are websites. They are kind of assets. They're not actual businesses. Were you looking at those types of things as well? Or I guess, Julia, you said you wanted a team. So you were not looking to just buy a website. You were looking for a proper business with humans that did stuff.
Exactly. Yeah. I was personally really excited about working with a great team.
Yeah. And that narrows down the pickings a lot because, as I said, right, a lot of what you find on those are just kind of like, not actual functioning businesses with teams. Correct? Is that what you were finding, Grant?
100%. And then we further narrowed it down. We realized that we did not want to do e-commerce either from a working capital standpoint, from you live and die by the effectiveness of your ads in the Facebook algorithm or the TikTok algorithm standpoint. And so that eliminated a huge swath of the businesses potentially for consideration.
Certainly Quiet Light, less now, but in e-com aggregator days of a few, just in the wake of COVID, Quiet Light's positioning was very much like this is where e-commerce businesses are transacted. So interesting when I started this, just how hot e-com was and how not it is now.
Oh, yeah. Yeah. Hello, tariffs.
I'll just underline, Grant, you being so skeptical about this idea of buying a digital business that can just be this passively run asset that throws off cash like real estate or something. Your skepticism weighs more because you actually have built a business like that. Okay, not passive. You're involved in the strategy. You support your team. So I don't mean to suggest it's passive, but you're somebody who actually has built something in that direction. And so we should especially pay attention to your skepticism that it's even possible.
Right. Well, and spoiler alert, we ended up buying a business that Julia now runs that does search engine optimization. That would be the other category that people would think about as a revenue generating website, for example. And as many people that own revenue generating websites have learned, is that Google continuously evolves, and your ability to treat that as an annuity that will never change is often much less strong than you might hope.
Yeah. Yep.
You can kind of see the reason for the skepticism even in the listings too, because the listings will always say, oh, the seller spends, 2 hours a week or 5 hours a week or whatever on this. And then they're like, why do you want to sell the business? It's because they want to retire. And so it's like, okay, why do you need to retire if you're not working to begin with? It kind of underscores why we're always a little skeptical.
Totally. Yeah, absolutely. And so back to you being a couple and the division of labor here, when you acquired this business, what was this going to be jointly owned? What does that look like?
Julia, you want to grab? Yeah.
Yeah. So I am the sole owner, technically, of Lexigate. We are a woman-owned business. But, we keep our money together. So, and we, I run all of our major decisions by Grant. I kind of almost see him on the board in some ways.
Great. So you're the owner, but in the back end of the back end, joint assets, married couple.
Exactly.
Yeah. Okay. And then Grant, so are you doing this search full time?
I'm doing the search probably with meaningful hours a week, but not full time because I'm still being helpful and involved in Nonprofit Megaphone as well. But I'm probably spending 15 hours a week on the search.
Okay. Top of mind for me right now is a buy side advisor advising. I am preparing to host a webinar for Athena Simpson, who runs such a service, and for that kind of category of services, buy-side advising, somebody like you, Julia, is kind of the ideal customer profile. Somebody who's got a high earning income and wants to go buy and own and operate a business, but doesn't have the time to search and is therefore confronted with the calculation: I can burn the boats and quit my BCG gig. And walk away from all of that, that W-2 income, and start spinning down my savings because I'm spending it on a search and rent. Or I can hire somebody to search on my behalf, which is, yes, expensive on paper, but net, I'm actually above because I'm still earning my great salary at the job. So this is all completely hypothetical because you had Grant. Nice to have a husband do it for you for free.
I did not get even meaningful. My commission was nothing.
But is this making sense? Is this something that you could imagine making sense? I mean, if Grant hadn't been there, do you think you would have been a full-time searcher, quit, gone and done your full-time search, or inevitably somebody was going to have to do the search work for you?
Yeah, I think it was just not going to be in the cards for me to do both at the same time, definitely. Although I do think it's important to have some skin in the game. This is ultimately going to be a business that you're going to run. And so even on top of, a busy BCG schedule, it's important to still, for me, it was important to still be engaged and paying attention. And I think that also, if you're in a scenario where you're going to need investors, I think showing that you're willing to invest your time in a search kind of proves out the grit and the effort that you'll put in post-search as well.
That's a great point.
But I think that being said, I think the model that you shared makes total sense because, for someone in my shoes, it would not have been possible to have done, 100% of the work on my own.
Yeah, doing the active search, though, if you're raising third-party capital from investors, can be a signal of seriousness and of grit. It's great. It's great call out. Okay, anything more to say before we hear about the business that you found?
The search process was fun, even though it's up and downs. I think back with nostalgia to the search days. It was a lot of fun, and I think that my encouragement to searchers, if you're in it, is yes, it is hard, but I suspect you will look back with nostalgia on the search days at some point. So there's lots to enjoy, even in the process.
But what makes you nostalgic about it, Grant? What did you like?
It's the biggest in the world. So maybe you have to caveat that with that because he just loves learning about business models and hearing about different types of businesses that exist and how much money they make and how they're structured. And anyway, so I will say I paid him in joy through him running the search experience. But anyway, I'll let you comment, Grant, on what you look back on nostalgically.
No, that's totally it. I love talking to sellers. I love talking to brokers. I thought it was so interesting. There's stuff I learned from totally unrelated industries that was helpful for Nonprofit Megaphone. I now spend a lot of my time investing in this asset class because I love that part so much. So anyway, I think it's fun.
Yeah. Looking under the hood, learn. You learn a ton, and you get to talk to all these interesting people. I understand that. The obvious difference in your situation and many people listening will be that your runway was much longer because Julia, you were gainfully employed. Grant,
Mhm.
you had a business that was going, so you didn't have the the ticking clock that many searchers will feel if they've quit and gone
Totally.
all in on finding a business.
Totally.
About this business that you found, please.
Yes. So the company we acquired is called Lexigate. We are a roughly 20-person marketing agency. We specifically do search engine optimization. We have clients across industries, but our largest focus is on law firms and specifically personal injury lawyers. So I now spend a lot of my day figuring out how to help people rank higher and higher for things like car accident lawyer Dallas. It's kind of in a nutshell what I do. Easiest way of explaining it.
Okay. And so what we know your broadly what your criteria were, but tell us more about how this intersected with what you were looking for.
Yeah, a couple different things. One, like I mentioned, one of my biggest criteria was team, and we loved the team at Lexigate. Grant actually went out. So one thing to note on our team is that we are very spread out geographically. We have folks across the entire world, but a lot of the team is in Romania. So Grant actually went to Romania in the diligence and met with not only the seller, but also the leadership team and other members of the team as well, really everyone in the team who is in Bucharest. And so really seeing their passion for what they do, their competence, they're just, being good, friendly humans who we'd want to be on a team with was a large part of it. The second thing is, I think like we were alluding to earlier, it can be a little bit difficult to be differentiated as an agency. And we liked that this was an agency, but they did do some things in a very unique way. One of them is just having fairly strong operations and just a really good way of organizing the work that they do. It was a really well-run organization. And then two, performing really great work for clients and having a track record of actually having improved clients' rankings. And to that end, even doing like a guarantee on results. And so we liked their methodology and their dedication to results for the client. Grant, anything you would add as far as things that you appreciated about the team and company?
100% recurring revenue, which was wonderful. Operated at like appropriate margins and so forth. Was growing not crazily, but growing slightly. And wonderful, something I didn't appreciate until we were in the process, but wonderful seller on the other side of the table who was deeply committed to making a smooth transition for the employees, for the clients. We met him in person. He allowed me and then ultimately both of us to meet with all of the key people on the team, and some in person, some over Zoom, which was just wonderful. We ended up having new contracts signed with basically all of the clients right before we ended up actually closing, which significantly de-risked that transition for clients and for us. And so it was just like such a joy to work with a person who was very, very committed to leaving the business in a great spot moving forward.
Amazing. Not only that you could meet with the employees who are so often a seller won't come even close to that, and it's something that buyers always want and are almost always denied. So that in and of itself would be a huge win, but that you also got commitments from clients that they would travel with you, that you as new owner, that the campaign would carry through to you. That's that's very unusual. So this is just all on the seller, just kind of making this happen. And when, let's talk about those clients in particular, when he goes to the clients and says that, I'm talking to a new owner, will you commit to sticking with the business when under new ownership? That caused no churn, because of course so often that is a prompt for the client to reconsider working with a business, and some of them will invariably leave.
Yeah, we were very fortunate. It did not cause churn. We were able to meet many of the clients pre-close, or like sometimes just after close, but a lot of them pre-close. And that gave them confidence, because ultimately, the business is providing very valuable service for them. Their desire was that service would continue at high quality. a lot of them wanted to meet us, which we were thrilled to do. We wanted to meet them, and that gave them confidence that, and we were helped by the background. Like, I have a digital marketing background. Julia has run multi-million-dollar projects for very large companies with very intense, time and deadline pressure and so forth. So it was sort of a compelling story to come in to say, we have the background and the experience to deliver great work for you, and we're so excited to make this even better than before.
Yeah. And how many clients does the business have, roughly?
We have around 30 clients.
30. Okay. So meeting with all of them or nearly all of them is manageable, even before closing. Where did you find the business, Grant?
So Flippa, which I was not expecting. Flippa is more often known for selling revenue-generating websites or YouTube channels or other, quote, digital assets like that. But it was on Flippa, and which is just goes to show that you never know where you're going to find something interesting, and why it is very valuable to be on all the platforms continuously. Okay, so you find it on Flippa, and can you say what numbers can you share about the business or the acquisition of the business? So we can share what's listed on my Flippa profile, which is that a total purchase price of $2 million on a 2x earnings multiple. $2 million, 2x earnings. Correct. Okay. So this business did earned a good amount of money every year for, I imagine, especially for Flippa. You probably don't see businesses that are generating those kinds of earnings on Flippa. It's been a while since I've been on the site, but fair to say? It's a mix. Yeah, the average is certainly much lower. It was definitely at the high end, like probably top 5% of Flippa listings in terms of size. And so did that make it a pretty competitive process, Grant? Or again, this goes back to you could differentiate yourselves as buyers pretty quickly? It's so interesting. So I talk to the searchers that we now invest in, and I say to them, there's always a story. Like, the story of a search acquisition is never, it was a competitive process and we won on price. That just never happens because, and it shouldn't happen. Like, a searcher should not be winning on price. We reached out through the Flippa platform. The seller actually saw the message. I had shared, like, hey, we're a husband and wife team. Love the business that you've built. I've actually had a background in digital marketing. This is my company, Nonprofit Megaphone. Would love to talk. He Googled me, found a video about Nonprofit Megaphone's core values, of which I must have made and put on YouTube or something. And he messaged his CFO to say, I think these are the people that are going to buy this business, before we even talked, which is remarkable. He told us this all later. Because of values alignment in between him and what he saw in this YouTube video that you don't really remember making. That's correct. Yeah, values alignment. We're very proud of our core values at Nonprofit Megaphone. We'd spent a lot of time coming up with them, and they're sort of unique. We have one that's called No Drama Llama, which is we don't make drama. We just talk about things and have hard conversations. Anyway, so just the core values are memorable. But yes, he really liked the values alignment, and he liked the digital marketing experience that we were bringing to this, because it gave him more confidence that we'd be able to take care of the team effectively. So you, unbeknownst to you were on the short list quickly of buyers. Correct. Yeah. Someone else, he later shared with us that someone else had offered on the order of 25% more for the business, but made it clear that it became clear in talking to him that he was going to be a very demanding and tough and sort of unempathetic boss for the team. And he shared all of this with, we're in Romania having lunch. Like, it's me and a bunch of the members of the team during diligence. And he shares about, like, yeah, Grant's going to be way better than this other guy who's you did not want to work for. So there's, again, it's like just being like a nice, thoughtful, like humble, earnest person is very helpful in the search process in ways that is hard to anticipate. Grant, why was he comfortable with his entire team knowing that he was selling the business, where owners are typically so uncomfortable with that being revealed ahead of day one announcements? He wanted to retire, which is, in my mind, is sort of the best reason that someone could want to sell a business, because if it's so great, why would you sell it? But he wanted to retire. And that's a more natural conversation. He'd actually been telling his team for years, I want to retire in this specific, like in 2024. And so it had been a discussion that's actually fairly open with the team, and that made that a lot more smooth. Because I had conversations as I met each of the team members, say like, oh, so are you surprised that he's selling? And a number of people said, nope, this is what he told us 3 years ago, that it'll be right about now. So this is right on schedule, which he's a very goal-oriented guy. It was really impressive.
And is there a cultural difference here or not, that nobody else on the team was stepping up to buy it or was being offered an opportunity to buy it, or maybe he did and nobody said yes? I mean, typically the people in the business, there might be somebody there, particularly I could see in a digital marketing agency where there's maybe going to be more entrepreneurial energy, that one of those people that you're talking to might have seen themselves as the buyer.
Team is a little bit on the younger side, so that there weren't people that were maybe ready for that life stage. We've been thrilled that like the entire leadership team has stayed and has been great. And it's been wonderful working with them. There was no sense of like, I'm disappointed that this worked out in whatever way. I never asked about that, but it was never something that sort of came up or seemed to be an issue. But yeah. To maybe your other question, the cultural stuff, it's been, and Julia can speak to this, it's been wonderful having, or her experience has been very interesting having a very diverse global team. And she's learned a lot just about like actually American culture through interacting with other cultures. So I don't know if you want to share about that, because I find it fascinating.
I want to get to that for sure, Julia, but let's put a pin in it for the moment. But Grant, going back to this moment in time, you go to Romania. That's where he is. That's where it sounds like the core team is. So basically, what's the distribution of locations of people actually? Is it like, how many of the people in the business are actually in Romania?
I can actually speak to that. I would say about 60 to 70% of the team is in Romania, and within that, most of them Bucharest. But we do have some in broader Romania, and then we have a team member in Ukraine, Pakistan, India, Philippines, Spain. I might be leaving out one or two, but yeah, we have a full global team.
And then in the U.S.,
and then U.S. yes, as well.
Do you think you differentiated yourself by flying over there to meet him, Grant, or meet the team, or do you think that any real buyer would have done the same?
So that's funny. I would think that any real buyer would do the same. The broker was very impressed, and members of the team said, like, wow, it's so cool that you've come over. And I sort of thought, like, of course I'm coming over. Like, this is a big deal. I'm not gonna not meet you. But yes, it did seem to go. And that was the goal, is once we had a great conversation with the seller virtually, that was our next step, is like, I'd love to meet you. This is a very human person-to-person transaction. Like, I'd love to get to know you in real life as soon as we can.
Yeah, I think the interpersonal piece is very important to us, not just in this, but even now in businesses. Grant's just investing in the seller, like going to meet investing in the buyer, going to meet the buyer, and sometimes even the folks involved in the business is important.
In your search investing, Grant, you go and meet the searcher.
I meet the searcher. I try and meet the seller if possible, but yeah, certainly meet the searcher. And Julia goes now to Romania once a quarter for the leadership team meetings. It's I don't know, it's fun. It's nice to do.
Oh, absolutely. I totally. And we're gonna turn the spotlight on you here, Julia, in a second to hear all about what ownership and operations are like. But Grant, one last thing on something you said a few minutes ago: searchers should never be the top bid. Something to that effect. Say more about why.
That's my belief. All of we were not the top bid in any of the deals we went to LOI on, to my knowledge. It was always, we think you are making a reasonable offer, and we have non-monetary goals such as culture for the team, continuity for the clients, just feeling like you're a great person to do business with. We really want a seller who values that alongside the financial transaction. One, because they're probably a better counterparty to have, just period. Two, it probably leads to a less risky acquisition because the risk of overpaying is lower. And three, if you're not doing that, like that's sort of the magic, or like searchers have many weaknesses: lack of committed capital, lack of having run a very similar business before often. But the personal side is where we should be shining. And that's the best way to see if that's actually happening at all, is, are you being chosen from non-monetary reasons?
Yeah. Excellent. Well put, and great point. Okay. So before we get into the actual operations, anything more to say about the transaction itself? You're not using an SBA loan because you wanted to avoid that. This is a business with the entity. Is it a Romanian entity? How does one go? How did you guys go about buying this business? What did that look like?
They had a Romanian and a US based entity because all their clients essentially were in the United States. We ended up doing it as an asset sale, which is very common in any kind of cross-border and just transactions in general. And that was the other reason why having new go-forward contracts with the team members and with the clients was so important, because ultimately that is what is actually, that's a core. And like transition services on the part of the seller, being supportive in the transition, the non-compete, like these are the things that are being transferred effectively.
Mm-hmm. And can you share anything about the terms? You were looking for seller financing. Did you get it? You were looking for seller financing not only to finance the deal, but precisely because of this transition piece to ensure a stable transition. Any other terms? What can you share with us?
Yes, there did end up being a seller financing component, and ended up being over a relatively short period of time, but we were very comfortable with that, and we just liked that there was a component of that to sort of make sure everyone's incentives were aligned for a really smooth transition. But other than that, it was very simple. We worked with a lawyer who I've worked with in the past who did a great job with the documents, but it was ultimately a very simple deal in many ways. We wrote, a page and a half LOI, which had all the terms. The ultimate purchase agreement was just a 30-page version of exactly the same thing with everything spelled out. And it ultimately was not wildly complicated.
Mm-hmm. Getting these commitments from the clients in advance that they'll travel to you as new owners, did that mean that you didn't put in language into the purchase agreement to protect against churned clients? So,
yeah, the way that those agreements were structured is that they're all like contingent on close, then this agreement becomes active. And so there's all kinds of language to facilitate that transition. There was one slight sort of contingency tied to revenue retention of some part of the revenue. And it wasn't that the seller note would be reduced. It was that if there was a meaningful drop off in the revenue post-close, that the terms of the seller note would be extended. So it'd be paid over a longer period of time, and that the seller would support business development efforts to attempt to replace that lost revenue. That was something we thought about a lot. It ended up being fine, and there wasn't a revenue loss. So it was sort of all a moot point. But that also gave us a little bit of additional comfort in the process.
Fantastic, guys. Well, as we now pivot into what actually owning this business is all about, let's get there by talking about quality of revenue for a minute. So actually I just had an interview earlier this week with Scott Alexander, who also bought a marketing agency. So we spend time in that conversation talking about the different types of agencies and the kind of quality of revenue in agencies. You had mentioned that your clients in this business really relied on you. Say more about that, because I think the general stereotype of marketing services is that in a belt tightening situation, they're the first to go. They're a cost center, not a revenue center. Usually, you're going to disabuse me of that.
We would like to say otherwise.
Yeah, exactly. So it feels like while the revenue is recurring, it's also not the highest quality, or not the tightest held. So anyway, say more about why the clients were so eager to pay this business money.
Yeah, I think part of what we loved about this business was their laser focus on results and truly bottom line results. So like I said, a lot of our clients are lawyers. So we actually measure results as far as number of signed cases that the lawyers get from specifically organic traffic, which is what we're working on driving. And so I think that's how they very quickly begin to see it as a revenue center, not a cost center, because we set up kind of that full lead attribution so they can see exactly the cases that they're getting from the work that we're doing. And then there isn't a lot of desire to turn that off.
SEO is an arms race. You're constantly competing, to move higher on the search result pages or to maintain your position. And so if you're making money from a favorable search result listing, it typically takes a lot of effort to even maintain that because everyone else is trying really hard to take you down a notch. And so as long as that's working, it's an interesting thing to turn off because then results will tend to decay and then you won't be making money. It's similar in many ways to, it has a longer lead time, but similar in some ways to paid ads where you turn the ads off. Now the customers stop reaching out to you and that reduces your revenue.
Sure. And what of SEO as a service? So obviously implications, ChatGPT and stuff, we got to hear what your interpretation of that is. But first, it's so unlike managing paid ads where you can know what your results are going to be, how many clicks you can generate. I mean, you can really make that quite scientific. SEO is a black box. We never know where rankings are going to be. So it seems like with your business model, you guys are really in an uncomfortable position of taking on all the risk of performance in a notoriously in an area that's notorious for really being hard to predict what your actual results will be.
Mm-hmm. Yeah, SEO is we don't have a crystal ball, right, on exactly what Google will do in their next algorithm updates, but it's also very analytical, which is one thing that I love, having come from the strategy consulting world, as far as you can typically break down your SEO results into the different factors that go into them. So like, what is your domain rating? How many backlinks do you have? What is the content on your page as far as quality and quantity? And how does that compare to your competitors? And what are your efforts around local SEO? And you can typically figure out, like if you just Google car accident in Dallas and you break down the top 10 pages according to those dimensions, you'll typically be able to see trends as far as why one company is higher than another. Once you really dive into it, it's not as random as you might think.
Yeah. Great. Okay. And then what of Julia AI and the fact that ChatGPT, we're being told that, it's going to be Gen AI that we all interact with as opposed to Google searches.
Yeah. This is a topic that is very trendy right now, and we're discussing with a lot of our clients. I think at the end of the day, people need to find information. So say you've been in an accident, you need to find a lawyer. The platform that they go to find someone is, of course, shifting, although Google still has the large majority of the search volume, especially for things that are transactional queries like finding a lawyer. However, the thing that we are noticing is that even if you're on a different platform like ChatGPT, the factors that cause a law firm to show up in a search like car accident lawyer Dallas are very similar to the factors that would cause you to rank high in Google. And so we did a full study on this where we simulated for 10 different markets who's ranking in Google versus who's ranking in ChatGPT. And there is a correlation between showing up first in Google and showing up more often in ChatGPT. That's not to say there aren't other things that are additionally helpful to rank in ChatGPT, and we're certainly testing some of those. But a lot of the core best practices from an SEO perspective are still helping you rank in the AI tools.
Interesting.
I could probably talk about this all day. It's a passion
it was a fascinating
for us right now.
Yeah.
It's a fascinating study. So the takeaway, just for our general education here, we in the audience, is that what's good for SEO is good for placement in AI responses to prompts for the moment, at least.
Yes, by and large, yes.
Mm-hmm. Very interesting. And actually, one thing that we didn't touch on, which is a big number to highlight, is the 2x multiple that you paid. So that's a lower multiple, right? Do you think because SEO may be suffering from stigma at the moment and people are worried about the long-term prospects?
Yes. I think that was especially right at the time of the transaction. AI has gone through hype waves, and we were certainly at the top of one of those. There was a lot of fear that, is there going to be a world where a year from now, no one's searching in Google and this whole business has to fundamentally transform? Our theory was that was maybe a little bit overhyped. And that's what the experience has proven out so far. Obviously, Julia's thinking a lot about AI optimization and so forth, but in the diligence process, and both of us, as we talked about it, were comfortable sort of leaning a little bit into some of those messaging headwinds around the industry, because you sort of have to be contrarian at some point.
And so, but just say more about it, Grant, that you just didn't think Gen AI was going to usurp Google as quickly as all the headlines were suggesting.
Indeed. And one example of that is that in Nonprofit Megaphone, we'd been trying at that point for over a year to build a little AI tool to help us write ads for our clients more effectively, just as an example. And we could not get it to be even close. Even we had a full-time developer, we spent a lot of time and money on it. We could not get it to be even close to what our human grant managers could do. And so I was seeing the hype that we'll have AGI by September, and no one will ever work at a human job again, and also trying very hard to even accelerate one small component of what we were doing in Nonprofit Megaphone. And it's there's a disconnect here. I think the euphoria had outstripped the reality.
Mm-hmm. I love it. Good for you guys for keeping your heads screwed on and seeing an opportunity by being contrarian, as you said. One other thing just about quality of revenue, and then let's really get into what kind of starting to wrap things up and hear how it's going and how it's gone. In my conversation with Scott Alexander, we talk about how recurring revenue, we treat that as searchers as kind of binary. Is it recurring or not? Recurring good, not recurring bad. But of course, there's much more nuance to it than that, and doesn't have to be that sophisticated, but it's lifetime value of this recurring revenue. If you have a marketing agency where you have contracts, but customers are churning every 3 months, technically recurring revenue business, but in fact, it's a really low quality revenue business. So what was the lifetime value here, or how did you think about that, or do you think about that?
Yeah, I mean, I think to your point, client happiness is way more important than any contract when it comes to lifetime value, because we do sign 12-month contracts with our clients, but then they do have cancellation. And so really, as long as the clients are happy, then it doesn't necessarily matter how long the contract is, because they will always renew. So we were glad we explored a lot of the past client relationships and knew that many of the clients had been with the agency for a significant amount of time, some 5 years plus. So that was an important indicator for us in addition to the contracts.
And Will, just a quick note, because this is so important for people buying marketing agencies, is the client retention and average tenure of existing clients is so important. Because let's say someone has a business that has 3-year average client lives, and they started the business 3 years ago, that growth curve is going to look beautiful. But once you get to year 4, now on average, a third of your clients are going to churn every year. And so just to stay at the same place in terms of revenue, you're going to have to add a third of your clients again every year, which is going to be much harder to maintain that growth. And your best path to growth at that point is extending your client life even more than it is accelerating your sales efforts. We looked at a lot of agencies where that dynamic would have been a very significant headwind, and something that is sometimes hard to appreciate if you haven't been in the agency world for a while. And that applies to actually all forms of recurring revenue. Is
exactly
where are you in the life cycle?
Yeah. And so do you have a sense of what a good churn kind of threshold should be? Or retention threshold, I should say, that you want to see an agency meet, and it's a way of disqualifying agencies which have problematic revenue quality?
Depends. It depends, like as with all things, depends a lot on the type of the business. I prefer to see things like 3 years at an absolute minimum. 5 years is good. Nonprofit Megaphone, I think we're getting close to like 8 years, which is wonderful. There are some dynamics though that I think if you can drill into are even more interesting, which is net revenue retention. So maybe that there are some clients that are leaving, but that's being offset by other clients upgrading the work that they do with you, such that that evens out. To me, that the two most important metrics for a recurring revenue driven agency are new client MRR, new client monthly recurring revenue added over the period, and the current client MRR change, which is the impact of upgrades, downgrades, and lost clients from your existing client base.
Okay, so you take ownership of this business, Julia, and say goodbye to BCG. First of all, what's it like to that kind of transition in your day-to-day, going from, again, a very type A, hard driving sort of environment to being a small business owner?
Yeah, certainly a transition. BCG was, of course, a very fast pace where things were new and due every day. And then transitioning into SEO world where I had so much to learn. I did not have significant SEO experience and exposure beforehand. It felt like a bigger open canvas as opposed to like the daily deadlines of the BCG world. And so I spent a lot of time at the beginning just learning and absorbing as quickly as I could. Flew out to Romania very quickly after we closed to meet with everyone on the team and learn about what they do. Watched a wide variety of the different training videos we have for our team, trying to just learn the ins and outs of the daily SEO work, as well as starting to jump in on meeting more and more of our clients, any we hadn't met already through the diligence and understanding their objectives, preferences, etc. was kind of my first focus areas.
And for those listening who might be sitting in a consulting gig or other W-2, what takes adjustment? What's maybe not so good?
Yeah, I think it was a different type of stress management, I guess I would say. So BCG was stressful in that I would say BCG is like FedEx. It's very expensive, but you get it overnight. Like there was just a very high quality of work that needed to be delivered at a very fast pace. And so that was a certain kind of stress. I would say business ownership feels like a different type of stress in that there isn't necessarily the, very fast deadlines like there are when a client pays you $1 million a week. But there's the different type of stress of wanting to make sure, at the end of the day, like you are the business owner. And so making sure that you're providing a great experience for your clients, for your employees, and that there isn't churn on either of those fronts, and that you're able to, continuously provide great new opportunities for your whole team is like just a different level of accountability than I had at BCG. At the end of the day, there's always someone, up the chain from me who was accountable.
Yeah. And do you find that this now being an entrepreneur is in line with what your expectations were, given that you've had your eye on being an entrepreneur for so long?
Yeah, overall, I loved the experience. I will say consulting, while I did not have direct SEO experience, consulting did still make for a great background for this in that I was getting new projects all the time. And so I knew that I really loved trying to figure out what to do when I had no idea what to do. And I feel like that was a very transferable skill set to now owning a new business in a new industry. Because I just enjoy the rush of figuring out, this isn't something that necessarily I have perfect information on or perfect expertise, but what are going to be the most influential drivers of the results I'm trying to drive and try to dig into understanding each of those. So I've loved the fast pace of learning that this has afforded me. And then I also love getting to work with the team. It's been a truly incredible team. And so overall, it's been a positive transition.
So this idea that consultants are in some ways one of the skill sets that they bring is the ability to deconstruct an industry and a business pretty quickly and understand it, is as advertised. It worked well in your case.
Yeah, I think so. I think I've learned a lot about how to quickly at least give structure to something that feels like a bunch of unknowns. And so that's been helpful in this context.
And is the business that you guys bought what you thought it was?
Overall, yes. I mean, I've asked probably a million questions since I started, and you can only ask a subset of those questions during the diligence. So I do feel like I learn something new every day. But overall, obviously learn both positive and negative things. But overall, the main strokes of what we were hoping for from the diligence, as far as the client relationships, what the team has been like, et cetera, have been what we have hoped.
You said that one of the things that you saw in this business and liked about it was that it had pretty dialed in operations. And that's something that can really be a weakness in agencies in general. Say more about that. And are the operations, in fact, as clean and well run as they look from the outside?
Yes, I would say yes. And we're continuing to improve. So I would, one of the first things that we did during the diligence is understand all of the project management system of the business. So they religiously use Asana, which many people may be familiar with for task and project management. And so that was in great shape, as well as there's just a whole series of different client, systems of client files and templates and Excel files and whatnot. And so I think from that standpoint, the operational basis was strong. One thing we've been doing since we acquired the business is implementing EOS, Entrepreneurial Operating System. And I do think that has helped bring the organization to a new level, because it gives even more structure to how do we think about goals? How do we identify and solve the root causes of issues? What types of meetings do we need? And how do we organize the team across different meeting structures? And all of those, I think, have helped, identify even more things that can be solved on the operational front, but also has given the business a lot of good structure to be able to routinely identify and solve issues. Grant's been using Entrepreneurial Operating System for years, and there are always issues. That's the core part of EOS, is helping solve issues. So I don't think there will ever be a place where we'll never be at a point where everything's solved. But I think the sign of a strong team is at least having the forums to identify, find the root cause of those issues, and systematically root them out is important.
So it was inevitable that you would put in EOS. You weren't necessarily responding to the organization. Grant was already well versed in it, and you guys knew you would do this.
Absolutely.
Great. So you fly over to Romania once, or you go over now as well still?
Yes, I go once a quarter for our leadership team meetings.
So we talk about this as being a remote business. Sure, but it still kind of feels like it's a Romania-based business, or a big chunk, I guess, no, a big chunk of the team is just Romanian. And so it's a way to see a lot of people in person all at once, I guess, is a better way to put it.
Exactly. Yeah, I get a lot of joy out of seeing people in person. And yeah, since about 60-70% of our team is in Romania, it's a good chance to get to see as many people as we can. We're not to the point yet where we can have like a global retreat flying in everyone from the Philippines, but maybe one day. But for now, going to Romania is the best way to see as many people as I can.
And so you go over there once a quarter for how long?
It depends, usually about a week at a time.
And Grant, have you gone back?
I've gone back once post-close, and we're going back. Julia can remind me of our calendar. I have it on the wall in June. Yeah, we're going back in June.
Great. You had said that working with people from other cultures helps you understand your own culture, our culture, American culture. Any examples that are worth sharing?
Yeah. I really like this book that's called The Culture Map. It puts different cultures on different spectrums. So for example, one is communication and how much context is provided in communication. And that's something that I have been learning a lot more about how different the US can be than other places. So in the US, apparently we are we are a culture that provides a lot of context. And so we kind of over-explain things, some people may say, whereas in other cultures, there's a lot more that is implied. So for example, many of my Romanian colleagues would not necessarily always give the detail on even simple things like, is a meeting in AM or PM? So it would just say, the meeting's at 3. And in the US, we'd almost always say it's at 3 p.m., right? But they're kind of thinking, isn't this obvious? No one meets at 3 a.m. So we're not going to give that level of specificity. So I've just been learning a little bit more about kind of my own style and norms and how to adapt to the way other places work.
I have to get my hands on this book. I've never heard of it, and I'm fascinated by it, just academically, but also I think it will have bearing on my own life. This exact point you're talking about, Julia, that context versus not, is one I experience acutely in my private life. I'm the explainer. As the American, I'm the explainer. But hey, it's better to over-explain than under-explain is my argument. I tend to lose, but anyway.
Yeah, totally. No, and I see it even in, friend dynamics and whatnot now, as far as I have some friends from other cultures, and they're just, they more jump right in and say, oh, she said this. And, who are we talking about? Who is the she?
Right.
Whereas, more American culture, we would always, first name, last name, everything's very explicitly called out in detail. Yeah.
I can't wait to get my hands on this. Okay. And so as leader of an organization where you're in the minority, charged word, but just speaking mathematically, you're in the minority. Do you adapt to their culture? Do you expect them to adapt to yours? How do you bridge the cultural gaps? Or is it not so overthought? You just go with it and you feel your way?
Yeah, I think more the latter, as far as just kind of going with it. I think in my mind, I always want to make things as smooth and easy as possible for the team. And so wherever I can adapt to what feels comfortable for them, I think is helpful. But I think part of it too is just recognizing where there are differences and knowing. So for example, one of the other spectrums is kind of how hierarchical a country is, and the US is very non-hierarchical, but other countries, especially if I think about my colleagues in the Philippines, are much more hierarchical. And so realizing that when I say something as CEO, it carries maybe a lot more weight than if someone in my position would say something to an American is very important. And so just recognizing the difference and trying to be sensitive to that, I think, is important.
Yeah. I don't think we got the time. So when did you close and how long have you been in the business, Julia?
We closed July 1st, 2024. So we are about 9 months, coming up on a year.
And what can you say about the prospects for the business? Is there room to grow in the personal injury space, or are you looking at adjacent markets to go into? Or what are you, how is that taking shape? You're the next, 5 years.
Yes, a lot of my focus has been on the sales and marketing front, especially continuing to expand in the personal injury world. There are many personal injury lawyers out there. If you just drive down the highways, you can come up with your client list from all the billboards. So anyway, I am very focused on that. We can do good work typically for other local services businesses as well. We typically wouldn't take on, say, like an e-com customer. But, personal injury is the most competitive search engine optimization world out there. And so those lessons of optimizing for local keywords also expand to, say, like a home contracting business or a landscaping business or some of those other kind of local SEO model businesses.
Yeah, sure. But less competitive.
But less competitive for us and for them. So we can make a big impact really quickly, typically. Yeah,
that's great. Of course, great call out. SEO is, of course, very competitive, period, but particularly in high ticket service categories. And so from the perspective of a personal injury lawyer, if you get a single client, that client can represent hundreds of thousands of dollars. So they're willing to pay probably tens of dollars or more per click.
Yeah.
Although I know we're talking SEO, so we're not talking pay per click, but
totally. But it's a good way of thinking about it as far as their ROI on their SEO investment. Like if we are able to rank them in such a way that they get just one more client per month, then typically their investment in SEO is paying for itself. And one client a year in many cases could pay for the entire year's investment if they get, one of those high ticket cases. But we typically try to dimensionalize their return on investment by thinking how many clients per month would they need to make this investment worthwhile.
Great, guys. Before we wrap, Grant, I want to hear just a little bit more if there's more to say about your search investing. But on the story proper, on this whole experience, is there anything that we haven't hit on that you wanted to make sure we talked about?
I don't think so.
How is it being in business partnership together as a couple? Talk to the couples or the talk to the couples who might search and buy together out there.
Yeah, it's been great. I think one of the keys to success of our entire marriage has been kind of each taking certain things that we are the primary driver of. And so, for me, I am kind of on point for Lexigate, but then kind of consulting the other person for advice, questions, et cetera. Because I think sometimes where people get frustrated is when, it's not clear who's responsible for something, or it feels like, the other person's all up in the other person's business on something they're trying to run. So I've had the privilege of kind of taking point on Lexigate, but Grant and I ask Grant many questions every day, right, from his own agency ownership experience. And I've been very appreciative of his willingness to share that. I don't know, Grant, if there's anything you would add.
No, vice versa. Yeah, we've loved the divide and conquer approach. Like I did the search, Julia operates the business, Julia operates Lexigate, I operate Nonprofit Megaphone, but we ask each other questions, every night. Basically, we have dinner and we talk about each of the businesses and
talk about the baby.
Yeah, exactly. The opportunities and joys and struggles, which has been a lot of fun. And we are business nerds, so we love this stuff. It's been a joy, but we're kind of weird people as well.
On business buyer fit, I imagine there's a lot, Grant, of expertise, having built an agency, that you can share with Julia. To what degree is that true? And to what degree is the success that you guys are having, or you, Julia, in particular, because you have this, you go to bed every night next to somebody who's run one of these businesses before. I mean, I would imagine that the business buyer fit here is kind of incredible.
Yeah, there have been a lot of things that have been really helpful. One is EOS and Grant's experience in that. I've been asking a lot of questions as we roll that out, and being able to have the specific examples from Nonprofit Megaphone has been very helpful. The second is on the sales and marketing front. So Grant at Nonprofit Megaphone has a very robust cold email process. And so I've been learning from that as well. Grant, I don't know if there's any you would add.
No, I think that's great. And I have benefited a lot from Julia is a much better operator than I am, and actually has very good strategic and focusing insights in a way that is sometimes very helpful for my, I want to do everything, or look at all these great opportunities. She's much better at focusing and zeroing in on the things that are most impactful. So we haven't talked about it at all, but she's enormously helpful for me in thinking about how to lead and grow Nonprofit Megaphone, also from the skills that she brings to her jobs in the past and now her business ownership. So that's been a ton of fun.
Yeah. That's great, guys. It sounds very complimentary. And is there some sort of marketing agency family holdco thing taking shape here, or not really necessarily, or at all?
Just two separate entities. I'm a big non-believer in the idea of shared services and all that stuff. I just think have two pure play businesses that do their own thing and don't make it complicated.
Great. Anything more to say about your search investing, or any message you'd want to share with self-funded searchers? Of course, we'll leave your contact information so they can reach out to you, but anything more to say about that aspect of your search life?
I love this universe so much that I have created the world's smallest little investment fund called Entrepreneurial Capital, where we are investing in self-funded search transactions. So I love having gone through it and having invested a bunch personally, I just love this universe and investing in the next generation of people that want to buy businesses. That business ownership is deeply joyful and also deeply hard. I've spent time crying on the floor, trying to figure out what to do in a bad business situation. And my desire as an investor is to be there with the people we invest in the trenches, in the good times and also in the bad times, and be encouraging. So that is the mission of Entrepreneurial Capital, and it's been a ton of fun.
And it does sound like indeed you are a very involved investor as opposed to just placing capital.
Want to be helpful, but not overbearing. So all the people we invest in are deeply capable and do not need me looking over their shoulder, but they often value having someone else who can be helpful and supportive and share experience when it's useful. So we love doing that.
Fantastic, guys. Julia Hensel, Grant Hensel. We will, of course, link to your LinkedIn's. Lexigate is the name of the firm. I don't think I have personal injury attorneys listening, so not very... Not sure the plug does anything for you. Nonprofit Megaphone has a slightly larger, broader TAM there, but again, mine's a for-profit audience. They're not doing nonprofit stuff. But thank you guys very much for sharing your story. Really an interesting and harmonious thing that you built here together.
Great chatting
Thanks,
with you.
Will. So fun.
Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.